Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Justin Chapman, head of digital assets and financial markets at Northern Trust, a global leader in asset servicing with over $16 trillion in assets under custody, which announced the formation of a digital assets and financial markets group in late June. Justin, it's great to have you with us. Welcome to Trade Talks.
Hi, Jill. How are you?
You are the leader of Northern Trust's recently formed Digital Assets and Financial Markets Group. What prompted the formation of this group, and what are its primary objectives?
Yeah, I mean, we've been working in the digital asset space now for probably about 5 or 6 years, but really what we're trying to do is align both our traditional asset strategies along with the digital strategies as they evolve over the next few years. So making sure that our investment required for our clients, whether it be digital or traditional, are all aligned under one common strategy.
Since the formation of the group in late June, what strides have been made so far?
Yeah, I think the main alignment is to really make sure our strategic vision for the next 10 years is applied across all of our counterparties and our strategic relationships. So our group looks at all our financial intermediaries, whether they happen to be banks, exchanges, fintechs, other exchanges and institutions, just to make sure that we have a common vision with those groups. So we've really bet on our big outreach program to at least probably 140 firms now since June in terms of trying to align our vision and strategy and where we think the markets are going aligned with those organizations.
And Justin, how will the group contribute to the growth of digital markets alongside the continued evolution of the traditional security services marketplace?
Yeah, we see sort of traditional and digital all as one space now. So we're really looking at the vision for our organization over 10 years. And we're looking for an adoption of digital assets over that sort of 6 to 8 year window. So our estimation is somewhere between 5 and 10% of the asset classes will be fully digital by 2030. So we're just trying to make sure that we can align with the evolution in the market, make sure we're at the bleeding edge with our clients, and make sure we can get the capabilities and services aligned on that strategic time by investing them upfront. So whether that happens to be a crypto asset or a digital token asset or a CBC, central bank digital currency, we just need to make sure that we're investing just ahead of the curve to make sure those technologies are there for when those products and services and capabilities are required.
And more broadly speaking, how has Northern Trust engaged with cryptocurrencies and digital assets as they have become more mainstream?
Yeah, so we've been working on programs since about 2017. So we digitized private equity back in 2017, 2018. And we've had initiatives, for example, in the crypto space where we're actually acting as a fund administrator or a hedge fund administrator in there. We also made a joint investment with Stan Chart Bank in a crypto custodian called Zodia. So we're trying to build those capabilities up, but from an institutional perspective. We're only serving institutional clients in this particular space. And we're trying to make sure we create investments which meet the sort of the institutional requirements of our clients, which is asset safety and making sure that the infrastructure is really fit for purpose for that institutional client base.
And what are the benefits of cryptocurrencies and digital assets, particularly in banking, institutional investing, and asset servicing?
Cryptocurrencies itself, I think our clients see that as an investment opportunity. At Northern, we sort of look at the technology that underlies cryptocurrency, whether it be distributed ledger technology, smart contracts, and we think there's a real opportunity to automate or to revolutionize how traditional assets are actually processed and transacted, all the way from issuance to life cycle management. So crypto is the use case that we've been really working on because that's the only digital asset that's really out in the market at the moment. But as that use case progresses, we're also seeing other types of asset classes moving more into the digital area, using some of the technologies that were trailblazed by cryptocurrencies.
How have volatility and geopolitics impacted your strategies?
Yeah, I mean, really looking at the crypto space over the last few months, it's been quite a rough ride. But from an institutional perspective, that sort of really allows us to focus on what's needed for that institutional landscape. So whether it's more robust technologies, whether it's improved regulation, it's certainly created a focus on the asset class itself. And actually over the last month or so, we've seen some significant investment from other firms, including ourselves in that space. And we're going to continue working on the infrastructure and technology provision to make that asset class safe. So it's just polarized and allows us to focus in a little bit in terms of what's going to be needed for these marketplaces over the next coming years.
And finally, Justin, what are your predictions for the future of cryptocurrencies and digital assets?
I mean, digital assets, we believe by 2030 are going to be pretty prevalent. So we're going to see them potentially develop through the alternative asset classes and through the cash rails. So we're going to certainly see the development there. So we're as I said before, we're looking at our asset base between 5 and 10% of our asset base moving to digital issuance. over the next 6 to 8 years. So, I mean, we're currently at 15 trillion. So if you think about that extrapolated out, we certainly think it's going to be an area of significant investment. We certainly obviously think from the crypto side as well. I think there will be regulation that brings that a little bit more into mainstream. So we're going to certainly see some more mainstream activity within the crypto space as the regulation moves forward over the next 18 to 24 months.
All right, Justin, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.